I think that people don't understand that the only difference between myself and whoever is out there listening and want to make this a total career path is simply just data. And these things take time. And people want things to happen very fast to them when they come to acquire an educator and such. But I'm trying to pack in 10 years of experience within a short hour time period. These simply take time. But just like anything in life, just like any career path you take, if you are unforgivably executing that same exact thing over and over and over again without deviating to getting another job or whatever the case, obviously over the course of time, you are going to become better. It just, things take time, and nobody gets to play the hardest game without going through everything I went through as well. We'll just put it that way.
All right, folks, here we are on Trading Up. We've got Emmitt Smith in the house. If you do recognize him, it's because he was on the show about a year ago. This guy is the real deal. He's one of the traders in the industry that everyone knows is top draw. So welcome back to the show, Emmitt.
Thank you. Thank you. Much love, man. Gratitude to be here for sure.
So, look, I mean, we're talking before the show, and you've told me that you've gone from trading prop firms to now trading personal accounts. So I want to sort of just first of all, dive into that transition and understand why you made that move and what was the thinking behind it.
Yeah, I mean, the long-winded story for sure, but I most recently transitioned from Forex prop firms to personal capital. Before I go into that, though, I kind of want to talk about barrier of entry. So the higher the barrier of entry into the markets it is, the easier it is to extract money from the markets, which I'll kind of break down. So when it comes to personal capital, although it's the highest barrier to entry, simply meaning if I want a 200K account, I need to put 200K into an account. It is a lot easier to extract money from the markets because there's a lot less rules that are implied within that account. You know, you don't have trailing drawdown and things to that manner. Second on that list comes Forex prop firms. So obviously a lower buy-in if you want 100K accounts, anywhere between $350 to $600. But it is harder to extract money from the markets because now we have rules in place. We have daily drawdown, max drawdown, potentially can't trade news and minor nuances and such, okay? And then we have the third tier, which is futures prop firms. So way lower barrier to entry. You can get a 100K account for probably $80 to $100, but it is by far the hardest way to extract money from the markets because now we're adding in things like trailing drawdown and such. So just understanding the mechanics behind that, first starting out in trading and such, if you simply don't have the capital to risk what you need to make it any type of benefit in your life, most people have to transition to prop firms to acquire capital. And then obviously to get to a point where you want to transition into personal capital, which is where I'm at now. Simply stated, like, why would I want to give somebody a percentage of my capital when I already have to give a percentage to taxes and such once I remove money from the market? So once I acquired the skill set for one, but the capital for two, it's really a no-brainer, the transition from Forex prop firms to personal capital, and that's where I'm currently at now.
Folks, if you want to trade big without risking your own money, check out Blue Guardian. You can get instant funding up to 400K, and they sponsor Chris Eubank Jr. and Birmingham City FC. Check them out at blueguardian.com or click the link in the description.
And what do you think that magic sort of number is for somebody going, right, okay, well, if I'm going to do that transition, how much do I need to make from the prop firms?
Yeah, I mean, the same thing as people asking me, like, how much money should I be making per trade? It's a very open-ended question. You know, we all have different lives. Somebody like myself who lives here in Tampa, Florida versus somebody who lives in India, like, the dependent on what you need to make and such is dependent on you. But I would simply, and again, when I say open-ended, I mean, like, emotional tolerance to how much you need to risk per trade and such is just different dependent on each individual. It's kind of tough to say, but I would at least say, I mean, if you don't bare minimum have 6 months of capital saved up for your life, not just living expenses as far as bills and such, but leisure as well, I think trying to make that transition, whether it's to prop firms of personal capital or transitioning out of 9 to 5, is probably just going to result into emotional trading because you're putting too much pressure on that little amount of money you saved up. Like, it just takes time. Like we were speaking about, I was in my job for 8 years as a licensed plumber before I left into full-time trading. But not only that, I was a profitable trader while I was still working my job as a plumber until I figured out the best time to optimally remove myself from a 9 to 5. And to be honest with you, like, there was no set point. I literally got fired from my position because I was showing up so little because I was putting too much attention to my business and trading and such. So like if somebody asked me, it's like all the way until you literally physically cannot go to your job anymore because trading and your other businesses are taking up time. From that point is when I would suggest to either remove yourself from prop firms or to remove yourself from the 9 to 5 altogether.
Yeah, it's good advice there. Now, what about like you've obviously sort of, I know you struggled at the start and then you sort of overcame that and you're now very consistent. What's your daily routine and how does that keep your consistency on point?
Yeah, so I'm first of all, I'm a data demon. So everything I do is backed behind tons of data, and that goes well beyond just trading, whether it's working out as well. The only reason why I'm able to get the results that I'm able to get, whether it's working out and trading, is by simply having data based upon what I'm currently doing and optimizing that data over the course of time. But I'm a creature of routine, bro. I wake up at the same exact time every single day. I trade the same exact pairs and trade the same exact setups during the same exact session. And I'm done at the same exact time every day. I allow myself almost the same exact amount of money to win or lose per day. And anything outside of that, to me, is going to keep me outside of the green. So I understand, at least as far as my system goes as a scalper, I'm a probability-based mindset kind of guy. And more often than not, if I'm following my system, I'm going to be profitable. And more often than not, if I'm not following my system, I'm not going to be profitable. So my routine is everything for me. And without it, at least in my head, I just don't believe I would be in the current point I'm at. So I'm very serious about what I do on a day-to-day basis.
And so let's put a challenge here. So something interrupts your routine or tries to interrupt your routine. What do you do to prevent that, or how do you sort of manage to overcome that hurdle?
Yeah, I mean, I'm a go with the flow Zen kind of guy, my brother. That's why my group is named Zen Lab. Things can throw me off of my exact path. I mean, that's definitely okay. I'll go with the flow with it, but understanding that when things go astray or I get too excited, whether it's on a good or bad side, what's kept me in this point in the first place is my foundation. You know, whether that's my routine or sticking to my trading plan. So I always like to speak with Stu, because I live trade every single day and have been doing so for multiple years now. When I hop on, there's just simply trades that I may potentially see that may be a bit more intuitionally based than my actual system that I'm teaching itself. And people ask me, like, why did I take that trade and such? I mean, there's certain levels of experience that I can't express to others as to what I'm doing within the markets, if that kind of makes sense. But when it comes to initially learning in the first place, I think sticking to a foundation and getting your routine is what brings you to a level of being able to mess with little minor nuances to become a better version of yourself, if that makes sense. But it's always, I think it does first before anything else.
Yeah, and I think it's a key thing as well, because a lot of people get confused and they go, well, I'm going to stick to the foundation, and then I'm seeing this mentor doing something different, and then it's like, well, he broke that rule there, he broke that, and then you go, well, it's not really black and white, but you kind of, I think you've just hit the nail on the head. You need to do the foundation work before you get to that point when the intuition kicks in.
I mean, math simply doesn't lie, So when I never hop on a call with one of my students and say, hey, what is going on with trading and such? Why do you believe you're not profitable yet? It is never an answer of the system is incorrect or I'm executing the system incorrect. It's always like, oh, well, I lost a couple of trades, so I'm revenge trading, or I'm trading at times I shouldn't be trading other pairs that I'm trying to experiment with. All these things are simply emotional trading. But when we state math doesn't lie, when I break down a whole graph that shows that, risking a 1 to make 3 and only trading at a 40%, you can still easily be profitable throughout the month. Math doesn't lie. It's just all the minor nuances of emotional trading in between is what catches, in my opinion, 98% of failing traders up, is just the emotional side.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, and you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
And so imagine a time you went into deep drawdown. I mean, have you ever got to that point where you start doubting yourself, or how do you overcome that or prevent even the deep drawdown in the first place?
Yeah, great question. So, yeah, of course. All doubt comes from lack of confidence within your system, of course. So when you ask, how did I overcome lack of confidence in my system? It's through the course of time and data within that system. If I understand, let's say I went through a losing streak of a couple weeks, a whole month of losing, but I have the last 4 years of my trades documented, so I understand what my system does over the course of time. The confidence that's going to come behind continuing to execute that system unforgivably, regardless of what's going on right now, is next to nothing. So again, the fix to all problems is simply more data.
So this, I suppose, takes me to, like, if somebody can't stay consistent, what's usually the reason?
If something can't stay consistent,
If they can't stay
it's just
consistent.
simply lack of data or lack of results within your data, skewed results. So when we speak about data, you have to acquire a certain amount of trades and then go back to those set amount of trades and optimize that over the course of, a lot of trade and such. But if that data that you're looking to optimize at the end of the month or after the week is skewed, just simply meaning that it's not actually based on your system. Maybe half of it is, but the other half is based on emotions. When you go to optimize based off of skewed data, that's where you're not going to have results that you're looking for. So when I speak about acquiring data, it simply needs to be no emotions to any degree. It's just based off of your system. And then over the course of time, those very minor nuances and such is what excels you from being that foundational potentially 40, 50% trader to a 60, 70% trader. But it takes a long time. And one thing I want to speak about is people like to change. People come to that aha moment or some type of data because of something they experienced for a whole week or even an entire month. And they end up pushing their potentially profitable foundation back into the root of unprofitability because they're changing things way too fast, So when it comes to changing things within your system, in my opinion, there needs to be data of at least a couple months before you come to a conclusion like making this change is going to benefit me and not hurt me over the course of a long period of time.
I mean, for students that you've seen go through like either your program or whatever, I mean, other traders, do you see people struggle to like consistently hit, let's just say, a month worth of data or gather a month worth of data, trading the same thing for a month, matching the exact rules? I mean, what's your sort of, if you had to give a percentage of how many people actually can do that versus can't?
Percentage wise, I don't even want to. But it's a very low number. And again, right. It just simply stated, and when I'm not speaking lightly as far as myself, as I've literally taught hundreds of students, potentially at least hundreds and hundreds of students, and it's all a result of emotional trading. We call it the 5% rule within an account. As soon as your account gets up 5% within an account, we get God complex somehow. We want to up our risk and we think there's no way we can lose. And then you end up destroying the account. Or on the worst side is 5% drawdown. Like people all of a sudden in their head, and this is prop firm environment, this is not more so personal capital, but in prop firm environment, when all my students are down 5% within their accounts, all of a sudden the account is gone. Everything gets thrown out the window. Your system is screwed. And it's like, shit, I'm either going to hit this next trade or it's going to be blown and I have to buy a new one. And I just want anybody here who's understanding investment and such, you're going to be in drawdown for the rest of your life. And so if it's something you can't come together with now and comes to terms with now, it's going to be very tough to see the good end of trading because at the end of the day, at least as far as my tactics go in scalping and day trading, it's a game of probability. So the only way that probabilities are going to be in your favor is by executing an edge. And if that edge, again, is just based off of skewed data or emotions, over the course of time, even when you optimize all that journaling you're doing, a lot of people are not getting anywhere because they're simply not being real with themselves. And so for anybody who's not profitable or looking to become profitable or potentially starting out, the data collection that you get on a day-to-day basis with your trades, be as real as you possibly can with yourself, because over the course of time, that's where the true confidence is going to come from.
I'll give you my little hack on that. So here's what I did to try and, accept the drawdown that you're going to get into was every time you won a trade or every time I won a trade, I took the money out of that account, put it into another account. Not so great with the prop firms thing. You can't do it with the prop firms, but with personal accounts, took it out. So I was always starting off on the same balance and my profit account would just grow, but I'd have to suck it up. If I lost a trade, I was always going to be like, whatever percent down on that account. If I lost another one, I'm either coming back to normal or I'm going, okay, well, I've lost too many. I'm actually going to have to take some of the profit out, get me back to the starting point and start again if that was the case. But it did work for me in terms of not, you're always starting off with that starting balance and you just had to accept the fact that you would go into drawdown if you lost a couple of trades in a row and either bring yourself back or to that starting point, which actually didn't take that long. and then you can carry on until you get profit, withdraw it, then you're back to the start again. It was a good little thing when I did it at the time.
Yeah, it's a profitability test, and I like to have students do that too. So it'd be something like you have them invest $400 to $500 into an account and have them risk $50 per trade. Okay, it can't be any further, because then when you go lower, it's tough to risk that amount. But $50 per trade, and then every single time you win, as you know with the broker, when you remove it from that trading account, it doesn't just go to like your Coinbase. It goes to a wallet address first, and then from that point you withdraw. And what I challenge them to do is every time they win, remove that from the trading account and put it into your wallet. So by the time you blow that account, or if you ever do, hopefully you keep going on, but by the time you blow that actual trading account, if there's more money in the wallet than it is the trading account, you at least know you're more than a break-even trader. You're profitable. And if not, then potentially it's ready to get back to the drawing board. So that's awesome. That's definitely a good key to kind of gauge things.
That's it. I like what you want even better, because I think then you haven't got any chance to put the money back in the account, and then like you're sort of eating into your profit. So that's a great little way to do it.
Hey, if candlesticks still confuse you, they're costing you more than you think. My private mentor JJ's decoded 25,000 hours of trading into one better candlestick. Click the link in the description or visit tradingnut.com to watch the free video and grab the free guide.
Now, what about FOMO, fear of missing out? You obviously have overcome that. So how did you manage to do it?
Yeah, and it just all goes back to routine. You know, more often than not, if I'm trading these same exact assets during the same exact time, using the same exact tactics, more often than not, I'm going to be correct, and if not, I won't. So FOMO is, we're always going to be leaving money on the table, especially people in my situation. I guess most people now looking at other people's social medias and such. There's always people who are winning in other sessions or giving aha moments to you, so you can decide like, oh, maybe I should be trading Asian sessions instead of New York. But the further you stick into your own lane and understand there's a very personal journey, the easier it is to get rid of FOMO, whether that's, going to touch grass every day after you're done trading or potentially remove yourself from social media. But comparison is the thief of joy. I actually don't, in my opinion, don't see any good in social media for somebody first starting out. There's a quick route for social media for somebody starting out or struggling. You simply need to create a best friend as fast as you possibly can. Like, let's say you were my student. I don't know you're my best friend, but to you, I have to be somebody you heavily merge with, somebody you enjoy the way that I speak, you enjoy the way that I trade, and do it as quick as you possibly can. And if there's any questions you have as far as my validity, bank statements, any type of trading accounts, any degree, ask these questions. And if I can't answer them for you, there's a million other people who do the same exact thing as I do. But once you find that person, whoever that bro is to you, everything else gets completely disconnected, and you're simply only learning from that one person. I think a big hindrance for myself, like for me, this is my 10th year within the markets, but only 5th year being profitable. And I wasn't really trading hard the first 5 years, so I really probably should stop saying that shit. But a big reason for my pain and misery and frustration when I first started out is just, like we spoke about earlier, information overload. Trying to acquire information from multiple different people, and really thinking I'm getting somewhere, but not getting anywhere at all because I'm playing the probabilities of multiple different people. And that shit comes with time. I'm not saying to close yourself out to all information, but when you're starting out, I think the quickest route to profitability is learning from somebody who's already in the place you want to be, but only that person, So finding the foundation, whatever that is, whether it's supply and demand, support, resistance, fundamental trading, locking into that foundation. And then it's very minor nuances over the course of a long period of time. And I'll give an example like I like to do with my students. So let's say that I got 100 trades underneath my belt. And I go to a backtesting session, not backtesting trades I may potentially take, but backtesting, looking at these trades I've actually already taken. I can ask myself a question. I'm trading for 1 to 2 every one of these trades, but more often than not, out of all of these trades, how often do they also go to a 1 to 4? And if over the course of those 100 trades, if 70 of them also go to a 1 to 4, now I have data-driven evidence why I should tweak my system. And obviously, over the course of time, it's going to work because I have data based off the last 6 months or higher. So going back to what we said a couple minutes ago, when you guys make these decisions, they have to be over the course of a long period of time. But the foundation, when things go astray or you're going too deep into analysis or you added something that may potentially mess things up for the next couple months, make sure you always go back to the foundation, which is support resistance or supply and demand or fundamentals, and then start to build from that point again, further confluences to make you a better trader over a long period of time.
I mean, talking about that, so what is your edge, and can you sort of explain it in a paragraph?
Yeah, in a paragraph. Yeah, nothing I can explain is in a paragraph. I've tried for many years now.
Well, as close to as a four paragraphs.
I would say very first is a higher time frame analysis. So when I go to 4-hour time frame, I want to ask myself two questions. One is, what are we currently reacting off of? Which is just simply what area of interest are we currently pushing away from? And number two, what is the trend? And so if both of those line up with each other, let's say we're reacting off of a 4-hour support and we're bullish, then when I go to my lower entry time frames, 5 and 15-minute time frame, regardless, I'm simply just looking for buys. But if there's a minor nuance between those two on higher time frames, and I want to build up further confluence on lower time frames, which is coming in a couple forms. It's either a trend line break or hold, a support and resistance break or hold, or previous session highs and lows, which is just where liquidity is at, to build up further confluence with my higher time frame bias to go ahead and enter the markets.
And what we'll do, folks, is we'll see if we can get Emmitt back on. He's already done a chart breakdown on the show, so we'll see if we can do another one after this, eh?
All right, great.
So what would you rather have, like a 90% win rate with low R, or a 30% win rate with high R, and why?
Yeah, I mean, same thing. We simply just can't beat math. So the higher R to R I chase for, the less I need to be correct. And so I guess as far as myself in my own situation, I'm on camera every single day of my life. So I would heavily enjoy showing people I'm a 90% trader all of the time. But dynamics wise and understanding that in order to withhold that 90% over a long period of time is really tough to do. I myself would choose the higher R to R and be incorrect less.
Nice. What's one trading belief that you had early on, but you've sort of turned out to be completely wrong?
That you need to remain a student and continue to learn. I definitely agree with that, but taking that to the next degree and trying to get too much information at once was a major hindrance in my career for sure.
Yeah, I think it is something that, I mean, you can learn forever in a day, right? There's always something else to learn in the market. Mm-hmm. I mean, I've done, 300 odd of these interviews, and I'm learning new stuff every single time I do them. And you do have to draw the line at some point. Was it harder or easier than you expected going into full-time trading?
Was it harder or easier? Well, it was tough for me because the first time I did it, I failed miserably and had to move back and leave my family here while I created further income again. So you have to be real with yourself. Let's just be honest. I was fooling myself by telling myself I was ready when I genuinely knew I wasn't. I just knew that I was going to be. So it's more of a make it happen now. We only have one life to live now. Like, why are you waiting? Why are you still working the slave ship when you could be full-time being a boss by yourself and such? So I put all of these outside pressures to get to where I currently am. And again, when I first started, I failed miserably. I mean, I fell forward, so it is what it is. But it was a tough route for me.
Okay, let's dive into the psychology side of things. So what about like an emotion that sabotaged your trading the most? Did you have one?
Yeah, just like same thing that's going on right now. Right now within my group is a perfect time for us to go to this podcast. I've been destroying the markets. I mean, I've had presidents call me, the mayors call me, saying, please stop destroying the fucking market. You've been taking too much money from the market, going crazy. For like 3, almost 4 months now, doing very, very, very well for myself. And then the past 2.5 weeks, whether people want to call it Trump markets or everything going on with tariffs, I'm simply a probability mindset technical trader, so I don't put any of those tactics into it. But people will allow 3 to 4 months of growth be destroyed within a short couple of weeks simply due to ego and greed. We've been doing well for multiple months, but as soon as people lose, instead of just allowing for the edge to continue to play out, just like we talked about the 5% syndrome, people just start to act out of emotions instead of their system, which more often than not is going to lead them to unprofitability. We were risking $200 per trade for these whole 4 months, doing very good, and we're glad to stick to our system. But now as soon as shit goes astray, now let's double or triple up our investment so we can get the money back quick. And again, for anybody out there listening, I will say this a million times over. I've never asked a student, why do you believe you're not profitable? And they've ever stated that is a problem with the system. It's always things outside of the system that they're doing as a result of poor trading for a couple of days or potentially a week or so.
Yeah, it's funny that, isn't it? It's like most people discount psychology out the gate, But then when it comes to it, it's like, oh yeah, well, I actually didn't follow any of the rules I put in place, and my greed got out of control. It's all that, and then, but then most people still won't accept or acknowledge the fact that it's still their mindset that's holding them back.
Yeah, it's like an ego thing, and that's one thing you have to do. And what I enjoy to do with my students is force them into journal. Hey, I'm not doing too good, Emmitt. Like, I'm just trying to figure out what's going on. Can we hop on a one-on-one? Sure. Pop in the schedule. We hop in. It's like very first thing before we talk about anything at all. Hey, brother, can you send me your journal? We'll just run through all of your trades. And it's always most part, oh, I didn't journal the last like 2-3 weeks of trades. It's like, well, then what can we go off of? How do you know you're doing bad or you're doing good or you're progressing at all when we have no idea what to go off of? Yeah. And for the people who do journal, potentially do have issues, whether that's system emotions or whatever, things can be pinpointed very fast by simply just running through those trades one by one. I'm not the firmest believer of speaking about how we feel during our trade now and then a couple months down the road showing that, oh, wow, we feel a lot better about taking this trade. And the reason why I don't care about the emotional aspect like that towards it is when we go back to optimize this data, when we go back and ask those tough questions, and more often than not, what is my system doing? Now, probably no one's going towards like, oh, wow, my emotions this day were terrible compared to what they were now. We need hard data. We need to optimize based off of hard data. So it's really like what the pair was, what the time was that we took it, what is the setup, and what was the R to R. And one big thing I like to do, just to make this quicker for anybody out here collecting data, is a lot of people, when they journal their trades, let's say we hit like a 1 to 2, they'll take a screenshot of just simply that 1 to 2, and that was that. But what I have my students do is take a screenshot of where that trade went all the way to where before it hit stop loss. So when we come back and we want to see more often than not where our trades running to, can we make more money off of the system? It's extremely quick to optimize a system once you get that data underneath your belt.
Yeah. And so I've been talking about emotions here. Like, do you ever enjoy losing now? So if you have a losing trade, can you turn that around in your head somehow to enjoy it?
No, I still don't enjoy losing. I always say every we don't take L's. It's only lessons, But no, still, I simply don't enjoy losing. I think that I've acquired so much data, especially over the past 5 years. For the last 4 years, every last trade that I've taken has been documented, whether it's from my signal service, calling it on live, or obviously with my own intent and stuff. But everything has been documented. So I believe that I should always remain at a very high level of trading. And so anytime I lose for more than a couple of trades in a row, it's still just as frustrating. I just simply don't act off of those emotions. I act off of my system. And that's what differentiates where you want to be versus where you currently are.
So let's take this sort of like an example. So you've just lost a trade, right? It's just hit your stop loss. What do you do? What's going through your mind at this point?
When I lose a trade, I'm simply on stream, so I can't throw chairs and punch walls and shit until I get off the stream. No, I think I just understand my risk management plan. So I'm only allowing myself more so 2 to 3 trades per day. So if I lose my first trade, I may potentially look at another trade, but if it doesn't line up within 20, 30 minutes, I'm moving on. Do I want to take another trade a lot of times, especially if I lose both of my trades in a row? Yeah, absolutely. Do I think that third setup is definitely going to play and there's multiple confluences and I definitely should take and guaranteed I'm going to get all my money back? Abso-fucking-lutely. But I simply don't do it because I understand what my data does over the course of time. And same thing we've said, 3 or 4 times now, more often than not, if I trade my emotions, I will be the 95% of unprofitable traders. But more often than not, if I trade my system, I'll be able to live the life that I want to within trading. So it's burned into my head, brother, is allowing for the data to speak for itself.
So you literally kind of at the end of a trade, going into the data, whatever it is, what do you use? Do you use online software or do you?
Yeah, Notion. So I have it's very, very old school, but I use Notion. So it's a very manual way of entering your trades.
And so you were going in there, right, and going, well, if I was to go and enter this in and then go and take some random trade that's not part of this, I'm going to have to see this tomorrow and go.
Yeah, but it's not only that. It's like I was dumb enough to show everybody my account every day when we live trade. And so if I want to pull that shit off a stream, when we hop on the next day, I have to show all of that as well.
Yeah.
And so accountability bleeds deep. It bleeds
Yeah.
into the signal service within my own data, but also with my entire community and preaching what I teach. I mean, if I'm out here telling you this is the risk management plan, and the very next day, and they're like, yo, what are those 4 trades right there that we didn't see yesterday? It's like, don't worry about those.
Yeah,
You know? So,
okay. So
accountability does run deep with the job as well, being a entrepreneur.
Yeah. Well, look, there's some massive insights in here, folks. What we're going to do now is jump into a price chart, but we'll put that in a separate video. Emmett, thanks for coming on again, mate. Was there anything I should have asked you that I didn't, that you think, oh man, I wish I'd really said that in this interview?
No, I just same thing, man. I think that people don't understand that the only difference between myself and whoever is out there listening and want to make this a total career path is simply just data. And these things take time. And people want things to happen very fast to them when they come to acquire an educator and such. But I'm trying to pack in 10 years of experience within a short, hour time period. These things just simply take time. But just like anything in life, just like any career path you take, if you are unforgivably executing that same exact thing over and over and over again without deviating to getting another job or whatever the case, obviously over the course of time, you are going to become better. It just, things take time, and nobody gets to play the hardest game without going through everything I went through as well. We'll just put it that way.
Yeah, great advice. Now, what's the best way for folks to find out more about you?
Yeah, so at Emmitt.trades on all platforms, it's EMMITT.trades. And if you guys want to become a real trader, I'm your definitely real source for sure.
Well, folks, what we'll do is hook that link up below in the show notes page. So go and check that out. We'll also hook the link up to the other interview we did. So if you want to hear more from Emmitt, go and check that out. And we'll see you down there. Hit subscribe, like, and that notifications bell. And we'll see you in the next one or the charting video we're just about to shoot.